Hello and welcome back to Core Finance. I'm Matt Brown, and it gives me great pleasure to introduce back onto the show Richard Matthews, who is a market commentator at Livesquawk. And today we're going to be talking about spoof. Now, a few of you old market traders and hacks out there will probably know of the game of spoof, but a lot of viewers won't. So what we're going to do is actually start off by playing a game. I'll first say hello to Richard, obviously.
Good afternoon.
Good afternoon. Let's start.
Is this for lunch?
This is for lunch.
Right,
yes,
I better
indeed.
take this seriously then.
Okay, so we've both got 3 coins in our hands, potential of a total of 6, I should say, and we've got to guess who has the right amount of coins, the total amount of coins in our hands. So we start off, you're the guest, so I'll let you go first.
I'll go 3.
He calls 3, I'm going to call 4, and Richard wins.
I look forward to lunch.
So Richard wins. That is lunch, not on the expenses account. That will be PA. Now, the idea of that game is basically to understand the big market, who has what in their hands, but also maybe to spoof or bluff the market. Now, the market itself, I mean, starting off, you've written a piece recently, starting off in that piece talking about the tulip and the tulip boom and bust, and how effectively that was a spoof market, but we're seeing similar markets still happening today, and traders are still spoofing the market, and maybe central banks are still spoofing the market. So just talk us through the piece you've written for Livesquawk and what that means for investors today.
Okay, I went right the way back to 1647, I think it was, when Tulip Mania was in Holland. I don't know whether people are aware of Tulip Mania, but the price of tulips went up to virtually the cost of a house and then subsided, a bit like the South Sea bubble, so one of the first financial bubbles. And I linked that into spoof and how people spoof the market. And I guess one of my first times that I came across spoof was when I was a young money broker, and I worked with a chap who will remain nameless, but he used to put on a top hat when we were trading or broking. And if we were actively trying to broke something, he would sit there in the background shouting out, "NatWest will have it, NatWest will have it." So it went down the phone and the client would hear it, and then he would take the offer. And this is spoofing and creating an impression that the market's more bid than it is. And that carried right the way through into the futures market, where you would have a local who might be trying to buy the market at 4. He would be standing there going, 1,000 at 5, 1,000 at 5, trying to scare people, and all of a sudden everyone would turn around and say, sold, sold, sold at 4, and he'd say, mine, thank you very much, walk out the piss, a happy man.
A nice little turn there.
A nice little turn, and the way that actually all fair, and it was open and everyone could see who was spoofing who, would have a guess who was spoofing who. And I guess you're right that the central banks do this now, and they toy with the markets. Do you think that's fair? They dangle ideas in front of them. But really what I end up with is that the market has changed, and you now have electronic markets where people can collude more easily, and you have had some horrendous spoof offers in the market, and the authorities are taking it very, very seriously. And I think that spoofing, which was a bit of a joke in my days and fun and everyone understood, is now deadly serious, and the punishments are deadly serious as well.
And we've seen that with high-frequency traders, where you'd have a bid and offer, and they would load up the bid to catch out other algorithmic traders that would join this bid and therefore make the size and volume on the bid greater, and then would go and hit the bid. And that type of activity is now illegal. Certainly is being outlawed by the likes of the FCA in the UK. But people doing it would say, well, I'm adding liquidity to the market, I'm providing, it's a free-for-all as a market, and therefore the practice that I'm doing, trying to eke out a lunch or a few pennies, a cup of tea, is fine because there's enough liquidity in the market. But the problem I think the regulators have is it is creating an artificial market. And
this happened with the flash crash in 2010. Which allegedly the Hound of Hounslow was behind and created a crash which was at 500 billion off shares and whatever, purely by being able to manipulate the markets. And then when the market was quiet, guessing where stops were and going in and showing loads of big offers and just scaring people into selling the market. You know, you got a nasty rap over the knuckles and you know, had his profits confiscated from him. So it's a very, very fine line between really manipulating the markets overly and actually just being wise and trying to push them a little bit.
Which brings us on, we've already touched upon it, central banks. We've got Mario Draghi speaking today, probably a little bit concerned about the continued rise of the euro against the dollar. Is that all down to dollar weakness? Who knows? But the key thing is a lot of central banks now, because they don't have the power to raise or decrease rates as previously they could and would do 10 years ago, they're left with a point now where they're spoofing the market, maybe not for direct financial gain, but to spoof the market to talk down the euro or talk up interest rate hikes or balance sheet reductions. So it is a case now that are those legal practices really to put it on the table?
Does Dodd-Frank cover central banks, I guess, is the issue. I mean, for years that they've talked their book, I suppose, is the expression to use. And you're right, they've run out of ammunition. You know, QE, what are you going to do now? You're going to taper. When are you going to start tapering? How much is it going to be? And this is a game of bluff that they are starting to play. Good question whether it's illegal or legal. Who's going to challenge them?
Yes, indeed. I mean, and that's the other thing as well. It's who is going to challenge them. And with all due respect to the central banks, the markets are more efficient. Yeah. They know what to expect. And the problem is with that, if they start bluffing the market and the market calls their bluff, then we could be in serious problems when they're trying to unwind these huge amounts of QE and the bonds that they have. It's incredible. And is that a concern to you?
It is a concern. Actually, it takes me back to the days of the ERM when the Bank of England tried to bluff the market and got the bluff called very seriously and very quickly. The numbers were much more than they are now. And there is a danger that the central banks will have their bluff called. And they have, to me, I can't see where their ammunition is. What can they do?
Well, we'll try and get Carney or maybe Draghi into the show, play a game of spoof with them, see how good they are at spoofing, and that will give us probably a good idea. But in the meantime, Richard, I'm now off to buy you lunch. We're both off. It is lunchtime, and thank you very much for coming on the show.
You're welcome.